Welcome, everyone. The presentation is going to be covered by Doreen, Eunice, Nicholas, and myself, Singalilwe. I'm just going to take you through the outline of our presentation and what we're going to be covering. So first, we're going to give you an overview of the company that we've selected, which is Press Corporation Limited. And then we're going to go into the financial outlook, comparing 2021 to 2022. And then from there, we're going to share an analysis of Press Corporation's 2022 annual report before we get into some of the strategic initiatives that they've implemented. And then we're going to share recommendations before we conclude on what the presentation has covered. So getting into the company profile, Press Corporation is the largest holding company in Malawi. It was founded in 1961 and has multiple subsidiaries and associate companies, including Ethanol Company Limited, Limbeleaf, Telecom Networks Malawi, which is TNM, Malawi Telecommunications Limited, MTL, Madeco, Press Properties, and National Bank, just to name a few. And as you can see, these companies are spread across different sectors such as banking, telecommunications, real estate, hospitality, as well as energy. Their vision is to be a premier holding company that dominates every market it serves with strength and agility. And according to them, their mission is to create and sustain industry dominant businesses in order to generate real growth in shareholder value and contribute to the socioeconomic development of Malawi and the region. So for the next part, I'm going to hand over to Nicholas to take us through a comparison of the outlook from 2021 to 2022.
Thank you so much, Singa, for that part of the presentation. So, team, as you've already heard, we are considering a financial performance report for Press Corporation, and in doing that, the report gives us a synopsis of how the company performed in the year 2021, as well as in the year 2022, just to give us some insights as to whether the company is making progress or indeed is not making progress. So in trying to do that, the report gives us some probability ratios. As you can see from the slide there, we have the calculation of the probability ratio that was made in 2022, as well as that one which was made in 2021. And you can see there, there is consistency, that the gross profit there shows that there is 71% in 2021, as well as 71% in 2022, which to us shows that there is some stability. Moving on, the report also looks at the return on capital employed in both years, in 2021 as well as 2022. As you can see there, in 2021, there is 23% return on capital employed. And in 2022, you've got 16% on return on capital employed, which means in that aspect, the company is not doing well, is slackening. If we could move to the next one. Yes, we also considered liquidity ratios for both years. As you can see, the current ratio measures the company's ability to pay short-term obligations with its short-term assets. A ratio of 0.7 to 1 for both years indicates that Press Corporation has less current assets compared to its current liabilities, potentially implying that there are some challenges with the company in that one. We also looked at the gearing ratio, and in both years, in 2021 as well as in 2022. So Basically, that's how the report compares in the 2 years. If we could go to the next slide, which looks at the visual representation of how the company performed in these 2 years. You could see that the dotted line there represents the year 2022, while the straight line represents the year 2021. And with that graph, you can tell that perhaps it's on shareholders' equity alone. That's where we could see that there was a significant improvement in the performance of the company in the 2 years. Thank you so much. I will be handing over to Eunice to take us through the analysis of the financial position in the year 2022. Over to you, Eunice.
Thank you very much. I don't know if you guys noticed, but I had dropped off for a minute there. My internet is not so friendly tonight. Can you all hear me? Can you hear me?
Yes.
Yes, we can hear you.
Great. Awesome. So thanks, Nicholas, once again. So that was a visual representation and an arithmetical representation of 2021 to 2022. So an overall analysis of 2022 in terms of its financial position was, just to mention a few, just to run down. We're going to share this presentation to everybody. But the turnover was 15.87%. Attributable earnings was 37.3%. So for the first two, I think I would like to I would like to mention what that is. So, sorry, Doreen? So, turnover. So turnover is revenue. Turnover revenue is the total income generated by a company from its business activities, which is typically from the sales of goods and services over a specified period of time. Whereas attributable earnings are net income, which is a portion of a company's profit that is attributable to its shareholders after all expenses, taxes, and minority interest are deducted. So dividends per share, if you go to back to slide number 7, dividends per share increased by 12.9%. And then market per share increased by 14.81%, and so on and so forth. We're going to move on to slide number 8, where we have areas of focus. So while the company did very well in 2022, there are areas that the company needs to focus on. And in general, the company needs to focus on cost management. So as you can see, despite the increase in revenue attributable to earnings, the company decreased attributable earnings. It decreased significantly, which suggests that the company faced a lot of challenges in managing costs. And in 2022, the company in general invested a lot in production, and then the company needs to monitor such investments to understand that those investments need to bring back returns. And then another thing is liquidity management. So while high cash generation from operations is positive, it is essential to manage liquidity and also to ensure that the company meets short-term obligations and fund future growth initiatives. Doreen, are you there?
Yeah, but I'll take over from the last slide, and then I'll just get into the next few slides. So I'll be taking us through some of the factors that have affected PCL's financial position across the years. And some of these include the economic environment in Malawi. So, for example, as we know that foreign exchange has been a massive issue in the past 2 years, where there have been shortages, and that has impacted basically the industries that PCL has been working in, as well as the devaluation that the several devaluations that have taken place from 2020. Apart from this, there were also technological and cybersecurity risks that the group was facing, which mostly affected its digital banking sectors with National Bank. But this also applies to other areas where they were using digital services. Apart from this, the COVID-19 pandemic had also affected some of its operations, especially in 2021. We saw that in 2022 things had improved, but there were still some issues that the group had to put in place to counter the effects of the pandemic, as well as the climate shocks that the group encountered. So the cyclones that hit, Cyclone Anna, Gombe, and Freddy, also impacted some of the group's operations. And this is something that they've had to put some strategic initiatives in place to avoid going forward. Another factor that also affects its financial position is investing in new territories. So the group invested in a bank in Tanzania in the past year, which also comes with its own risks when you're going into a new market. So these are just some of the things that obviously affected its financial position. But despite of all of these challenges affecting the group, there were some strategic initiatives, as I mentioned, that the group has been implementing, specifically in 2022. One of these was expanding TNM's network and modernizing it to better suit its customer base. They also enhanced National Bank's digital platforms and expanded some of the branches and renovated it to make sure they were appealing to their market more. Apart from this, they also increased ethanol production, and with MTL, they basically expanded some of their services to make sure they were covering a wider group of people. They also conducted some service station expansions with the Puma company, which contributed to quite a significant portion of their growth. So that's just to give an overview of some of the initiatives that the group has been implementing to make sure that it's still growing. And then I'll hand over to Doreen for the next part of the presentation.
Thank you very much, Singa. So I will be presenting recommendations. So firstly, we're starting with the strategic innovations recommendations. So the group needs to branch out into CSR opportunities such as youth mentorship. As much as the group says it's hiring younger, fresh new graduates, but then it should still invest in the youth that are coming out, as well as in terms of mentorship and other forms of internships. So similarly, it should explore the integration of emerging technologies such as IA to better manage customer relations and data. Looking at the analysis, we can see that the banking and telecommunication sectors are the two sectors that the Press Corporation Limited mainly brings in a lot of revenue. So moving with the world and to IA in the banking as well as the telecommunication sector would be quite recommended. Exploring opportunities in renewable energy markets such as biogas productions to diversify the product portfolio and enhance sustainability. So in terms of sustainability, in a world that is moving green and in the world that is for green, if the company adopted such form of initiative, it would really help in terms of its sustainability in the future. So institutionalizing and implementing mitigating strategies to respond to pandemics, natural disasters, and economic shocks, for example, customer self-services, initiatives, and enhancing digital platforms would also very much be recommended. So over to the next slide, Singa. So quickly looking at the financial recommendations, we have cost management and operation efficiency, revenue diversification and growth, as well as financial risk management. So enhancing cost control measures and optimizing supply chain, it means in terms of cost, and the group should be more efficiency and should run more efficient strategies in terms of its cost management and operation efficiency. Revenue diversification and growth. By exploring new markets, it will be able to invest outside the country and also have a form of, it will also have other form of currencies, not just local currency. In that way, issues of devaluation of our local currency will not affect the group if they would explore new markets. Financial risk management, hedging strategies, as well as debt management, which is very recommended in terms of protecting themselves from future risks that may come, mainly in terms of the hedging strategies. So these are some of the recommendations, both financial recommendations and strategic recommendations that the group is being advised to watch out. So in conclusion, the presentation has reviewed the financial performance of the Press Corporation, Malawi's largest holding company in the year 2022. From the company's annual report, the company registered significant growth by the diverse business portfolio and strategies that it has in its different investments. So some of the weaknesses that were noticed and challenges were registered under the review. Recommendations have been provided in which, if they're followed up, would project more growth in the PCL revenue in future as well as in 2023. So this marks the end of our presentation, open for questions to the group. Matfali.
Yeah, I would like to know from your own analysis, what were the main drivers behind the 15.87% increase in turnover?
Team, who would like to take that one?
I think I can take that one.
Doreen, I'm sorry. I thought I was speaking. I think I was speaking over you.
All right,
Out of me. But can you go ahead, or should I come in? Doreen, should I go ahead, or you're good?
Go ahead, Eunice.
So there were a lot of drivers in 2022 that sponsored the increase in turnovers. One mainly that I would suggest to answer your question was the continuous but also generous buy-in from shareholders. So for some reason in 2022, the market was at a shock where people were buying its stocks, PCL stocks, which were at a high rate, but people were still buying. So that is what influenced the increase of the 14%, like you said. I hope that answers your question.
Yeah, clear. Thank you.
All right.
I'm
Do we have
asking any
questions?
Yeah, I have a question.
Yes, Mercy.
Yeah, maybe just to understand, what does CSR mean? You talked about CSR, yeah, on the recommendations.
Corporate social responsibility.
Thank you so much.
So as a company, do you want me to expand, or is the abbreviation meaning okay with you? It's
okay, but you can still expand. It's fine.
Yeah, for the sake of other people, maybe.
Well, I've been talking a lot. Singer, corporate social responsibility shoots.
Yeah, so basically, corporate social responsibility is what a company implements to ensure that they're giving back to the communities that they're serving.
Right.
So, for instance, with some of the telecommunications companies, if they have a good base of customers, they will want to make sure that they're also giving back, and they sometimes have social initiatives. We've seen the Standard Bank Fund Run, so things like that would be counted.
Yes.
CSR. All right. Any other questions? I can't see any hands, so
So we are at our 20 minutes mark. I don't know if there's anyone that has a hanging question for us.
Thank you very much, everyone, for attending and listening to our presentation.
Thank you, guys.
yeah.
Yeah, thank you. Good night.
Good night.